Okay, hey everybody. We are very excited this weekend because this week we got our building plan approved from the city. Pretty exciting. I mean, how many people in this meeting are excited about that?
Yes. Yay.
Yeah,
Yay.
we're very excited.
Yeah, we did an announcement yesterday, but we have this scheduled um wealth webinar, this lunch webinar happening right now. And thank you for joining and receiving the video footage of this. And we're going to try to get through this very quickly because we respect your time. We can send it right out. We could send it out today if we're ready, right? So we got our building plan approved. We're excited. Phase 1, 226 units, Class A luxury, garden style, multifamily. And our tenants stay 5 or 6 years. They don't turn every year, and we don't have that expense of that turn. So we have been quietly excited for quite some time, letting the city work, letting the architect, engineers, general contractor work on finishing that building plan. But now we can shout it from the rooftops, and we're going to go quickly and give you this wealth webinar on how to do a stellar deal. Because, Mr. Davis, what I have seen in the market is a little bit of uncertainty. And we've seen this before. So we've seen that we have had investors be uncertain, but once they do their due diligence with us, then it only makes sense. We just kept our head down, kept working, got that building plan approved, and now we've gotten a number of interested lenders that are ready to take us into the next step. With that equity piece, with the construction loan for 2 or 3 years, and all of that is in place. Now we have this small portion for private investors, and the door is only going to be open for a short amount of time because we will fill up quickly. Everybody is contacting me about this building plan. So if investors want to get in, Mr. Davis, then they need to get in fast and get in line. We are always
Yes.
full with waiting list on our properties. That's how my properties have been for the last 20 years, full with the waiting list and rents about 25% over the market. So it's good. It's a good product. And today we are doing this wealth webinar, how to do a safer stellar deal. I wanted to introduce our panel today. We have Rochelle Fortu, who has a finance degree. We have Dimvip Davis, who is Vice President of Investor Champions Club and also an owner. He is a partner in this project. And we have Anthony, who has a marketing degree, and we have Mark, who has technical degree background. So we brought our heavy hitters today for you, and we're going to go fast and keep it to a quick lunchtime presentation. So let me go ahead and share my screen. And bear in mind, we are not Zoom experts. We are developers in commercial real estate. I have 20 years of commercial real estate. I forgot to introduce myself, but 20 years of commercial real estate. And share screen and do a slideshow here from the beginning. Okay, in the beginning. In the beginning, God created. Okay, wealth webinar. This is why we're here. This is a great time to put this out into the market because it is how to do a safer, stellar deal. 7 steps to successful commercial real estate investing. And for us, it's a little bit boring. It's a little boring because this is what we do. But for a lot of people who are looking at this investment, we're talking to them on the phone. Hey, come have a Zoom with us. Come do a 15-minute discovery call. Like, they don't know what to do. They may be a doctor. We have a lot of doctors investing with us. They may be a salesperson, successful salesperson. We have a lot of successful salespeople investing with us. You have a niche that you're very, very good at. Commercial real estate is a different niche. It's a different vertical market, and it has different nomenclature as well. It has different nomenclature. So you probably don't want to learn a completely different career, but we do want you to get some due diligence and know how to analyze the deals that are coming across your desk. So Mr. Davis, David Davis, and he is our Investor Champions Club VP. He's going to talk to you about some of the different options that you need to be thinking through.
Okay, so when you talk about active versus passive investing, what you're looking at pretty much, if you know about multifamily already, you have your general partners and you have your limited partners. Your general partners are pretty much your active investors, which they bring the experience and they pretty much run the deal and make sure the deal is actually operating to meet the financial goals there. The passive investors, which this is a team sport, the passive investors are pretty much picking up mailbox money there, and they are looking towards the advanced operators, and we'll invest together. And they also get to learn commercial real estate experience as they go along the way there. And if you look at prestige deal, active versus passive investor, the split there is 90-10. Actually, the active investors actually getting 10%, the passive investors are getting 90% there. So that's the pretty much difference between active versus passive investing.
And what kind of a split are we seeing on some of the other deals in the market?
Yeah, most of the other deals, what you're seeing in the market is 70-30 there. So 70% is actually going to the LPs, and the GPs are actually getting 30% there. So from time to time, you may see 75-25, but we are giving a great deal as 90-10.
It's 90-10 where the limited partners are getting 90% and the general partner team is keeping 10%. That's unheard of. Nobody does that.
Yeah, it is unheard of, most definitely.
I even know of one general partner who is doing 70-30 on his car washes, but he's taking 70 and he's giving his limited partners 30. So now you know.
Gotcha.
Okay.
Okay, so for the excuse me now, for the advantages of passive investing there. So if you look at passive investing there, it's half as risky as putting your money into the stock market. So you actually have your money into a hard asset here, and you are not investing in the stock market. So you have collateral in our deal. And if you look at for us passive investors, you're looking at it's half as risky as dealing with single family homes there, because you are diversified among many people actually paying the mortgage itself there. And if you look at from a bank perspective, the bank knows that the apartment has to pay the rent, the individual does not have to pay the rent. So you have those benefits when it actually comes to being a passive investor there.
That's true. The deal has to be good enough that the property pays the rent, pays the overhead, the mortgage, keeps the lights on. The property has to qualify for the loan. Yes, they're getting my financial statements, these lenders, but the property has to meet a certain debt coverage ratio. So our deals have approximately a 1.4% debt coverage ratio, DCR. And what that means is for every dollar that's paid out, we bring in $1.40 in revenue. Well, the bank requires about a 1.2% debt coverage ratio. So we've got a good margin, even in our ultra conservative bank underwriting. So great point. Okay, this is the reason for this webinar. We promised you 7 things to be thinking about when you're evaluating deals. So we've got hard questions that we want you to be asking. We encourage you to bring hard questions. We're tough. We'll put on our football pads and we'll go toe to toe with you because we want you to. And we'll invite you to ask the hard questions. That's what our videos do say. You want to vet the company and partner background. So, how long have you been doing commercial real estate? 20 years and 400 plus years in commercial real estate and construction for our team. Track record, back to back. You know, we have done this asset class before, and what we found was that in 22 North, we'll show you later, in 22 North in Austin, this exact asset class that we're working on in Dallas sailed through the pandemic. We didn't see rent moratoriums on the property. We only saw rent specials one time, and our tenant type will stay 5 or 6 years. So they just are building their career. They're paying their rent. That's all we want. That's all we care about. Just pay your rent. So good track record for us. Right now we have closed Fund 1 in Dallas, oversubscribed. We brought in over $9 million, and we have 2 funds available. One is a mixed-use condo project, and that would bring in condo money, and also that would give cash to the property and be diversified with that mixed use by having apartments in the bottom and the income stream, the cash flow for years to come. That's Fund 2 that's available in Dallas. And then we do have a Fund 3 that is available in Dallas that you need to ask Mr. Davis about, ask Diviv Davis about at zoomingwithprestige.com. That's how you get to his booking link, zoomingwithprestige.com. Property management. Let's look at that. Who do we have for property management? We have one of the best property managers in Dallas already lined up for the property. I have multifamily experience from owning properties, and the bank sees that on my resume, and that's why I can sign on that loan too. Fees. Let's talk about fees. What does a syndicator do? Well, a syndicator versus an owner, they are only doing the deal because they get a fee. They don't know really about the property. They have visited the property, but they're not boots on the ground. We as owners are deploying that capital right into the entitlements and the permitting. As you know, we've gotten our building plan approved, and we've raised private money. When the interest rates were so high, we raised private money and deployed it. And that's why we're here today. So we are moving on. These are some mistakes that owners make. They're unaware of the tax benefits of passive investors. You can do a 1031 exchange here. You can participate in the cost segregation and depreciation expense to potentially offset your high income. If you have a high income and you need some tax exemptions, then that's a possibility depending on your tax situation. And we're not attorneys, we're not tax attorneys, we're not CPAs. You need to look that up yourself with your professional, but many take advantage of the passive tax credits, tax benefits against ordinary income. Super, super great. I'll pay my own tax, of course, but I love to get those tax benefits that tax attorneys can show us. And we have our cost segregation study. So on every asset, we have the roof that starts to deteriorate over the years. We have the big ticket capital expenditures like the parking lot and the HVAC equipment, those kind of big things. So we can take that ordinary depreciation where in a multifamily property will depreciate over the course of 23 and a half years, and we can force that depreciation all the way into the first couple years just by it's a paper deduction. So first couple years with cost segregation study, and then we just split that on a pro rata basis with our partners. We have a special relationship with an IRA custodian who has flat fees. And they are very fast in working with you. They'll put you to the front of the line. If you give them our code, Honors 150, then they will put you to the front of the line in helping you to translate your current investment vehicle into whatever you want. They've got great ideas. I am not an IRA specialist, but you can come into our property with cash. All of the big investors invest with cash. I'm $1 million into this, and so I have a lot of skin in the game, and a lot of investors that are big invest with cash. Now, some of our investors are investing with a 401k from a previous employer, and I say, keep your job. You know, it took you decades in this demographic to build your career. Keep your job and use your discretionary income to diversify with. We've got a 401k from a past employer that can be translated into a solo 401k or an individual 401k, and it can be put to work here. You can get up to 3 times return with collateral in the property. Nobody does that. Nobody collateralizes you in the property LLC where you're secure. I mean, God forbid I should graduate to heaven early. What does that day look like? Well, the investors are made whole because they're collateralized by equity in the property. We've tripled value in the last 2 years. They are collateralized by equity. And then they get their pro rata share of the sale. It's a good day. It's a great day. So you can bring your IRA in, you can bring your Roth or a regular IRA, and our custodian will help you to put that into an investment vehicle that makes sense for your financial situation. 1031 exchange. We can work with 1031 exchange on our properties, and you can save tax, you can defer your tax. These are tax deferring vehicles. Excellent. Mr. Davis, can you hit this slide? I put you on the spot.
Okay. All right. So in reference to looking at value add, is that we actually purchased the property a couple of years ago for $6 million there. And currently we have the entitlements on the property, and we have our building permit, which we mentioned at the beginning there. So we are forcing value of the land itself, you know, where we was at 6 million, and we currently valued around 16 million. So, you know, we haven't went vertical yet, but we're still, you know, forcing and adding value by us actually putting those entitlements on the property and moving forward with the building permits, right? So we're increasing your profits there, so that way you can have
And then
more profits.
what's it going to be worth once we have 350 units? 220 million?
Correct.
Yeah, it's good. I mean, we can build cheaper than we can buy. So we are forcing value onto the property. We are forcing value on that land. Whereas if we look at the market and the syndicators are outbidding each other for this Class C property and that Class D property and trying to force value when they've overpaid for it, they're going to lose money. The rents are flat. There's no profit. That's why you can't get more than a 1x or a 1.2x from those syndicators. So when we're saying up to a 3 times return, this is one strategy that we're implementing that makes sense logically to be forcing value and forcing appreciation on this land, just like this picture of 22 North. This is the common area, the pool area with the grills in the back. And you've got the 3-story walk-up asset type in this property. And we are leveraging all of the architectural and civil from the 22 North property in Austin to the properties in Dallas. So we have financials in the deal room. We have the stabilized year 1 budget. We have a 7-year pro forma. And if you want to do homework on learning some of these due diligence practices, then just hit that QR code, ask us for this slide deck. We'll be happy to send it out to you, or go to morefreedom.com and you can watch the deep dive immediately. It's about 30 minutes long. It's excellent about our past development experience. This is how you want to vet a working team. And all of the market updates, really good deep dive. I recommend it highly. Okay, so the next steps for an investor who is interested in a deal. Actually, this is 22 North. It's an actual picture. Let me move the frame. It's an actual picture of the common area where you've got the kitchen, party area with a waterfall island. And then you've got a sitting area for our 30-something tenant type. This, this actually gets into the design that we're working on right now, where your fixtures are decorations. It's got that Southwest flair, which people all over the country will be coming to Dallas, and they'll be identifying our property because of the Southwest flair. So that is just such a pretty picture. So, Mr. Davis, can you look at what the steps will be when somebody gives you a call and or comes into a Zoom, and what does that process look like for us?
Okay, so the first meeting, what will actually happen at the first meeting is that you will get to know me from a better standpoint, actually, because we're going to be on a live Zoom call. And then I will get to know you to find out, what is your why? Why do you want to actually invest in Prestige? Why are you looking at multifamily? What do you do in your career? What is your plan so we can actually help you to hit your plans going forward for the future there. And then I will actually also go through it and explain to you about the property itself, why you will want to invest in Prestige, looking at the location itself. I'll give you the experience of the team. I'll tell you about the underwriting, the risks that the risk mitigation plan allows. And then from there, if you still have an interest, my team will put you into the deal room, which if you go into the deal room, that actually gives you very good pictures of our 22 North. It actually gives you our investment snapshot. It talks about the Dallas area being a great market to invest in, and it explains to you why this is a rare opportunity. And it gives you the details about our risk mitigation plan. And then it hits the key highlights of our financial information, such as we're investing in the construction costs at around 100 million. And we expect for the stabilized street value to be around 220 million. And on the right-hand side of that deal room that I will share with you in that first meeting that I'll get you to log into, you will actually see about 20 to 30 plus documents that you can go through and actually fully vet us to make sure that, this is the type of deal that you actually want to get into. So that first meeting, you will walk away, you will actually get to know me, and then I will get to know you, and you will understand the deal, and you will be able to go do more research. And at the end of that call, we are normally schedule a meeting to a meeting, so we can meet again 5 to 7 days from that point. to actually get you signed up for your documents for your subscription agreement and company agreement with Prestige.
So if I'm coming in as a new investor, are you going to force me to make a decision on the spot the first day?
No, no. The first meeting is, pretty laid back, and what we recommend for all of our current partners, future partners that may come in, that you go do your own due diligence. We're just giving you the information, and we're informing you that we have a safe deal for you to invest in. And we also educate you on how to go vet other deals that you may be looking at. So it's no high pressure for you to come into the deal. But we do have a great deal, and we will explain that to you in details.
So is it that the cadence is 2 weeks for due diligence and 1 week to send the wire?
That is correct. So, somebody that's serious about coming into Prestige, the whole process should be, it could be a minimum of 2 weeks, but the maximum should be 3 weeks. It shouldn't be a long drawn out process there. So if you're coming in with a self-directed IRA and you have that set up already, or we can actually introduce you to our secret sauce, and we still can stay within that 2 to 3 week time period.
That makes sense. And so they can be setting up their IRA while they're doing their 2 weeks of due diligence. We're looking for investment partners who are serious. We're not going to force you to make a decision in one meeting. We have a week, 7 days in between meetings, so you can do your due diligence. 2 weeks due diligence, 1 week to send the wire. And that's really plenty of time to focus on your future, getting up to a 3 times return with collateral in the property. I believe that is our last slide. Oh, partner with us. So we've got, here is our QR code. We're not Zoom experts here. So QR code, and we've got our different branding. We've got Honors Way Group, which is the umbrella organization over the properties. We have commercial real estate investors. We have the Prestige Apartments in Dallas, and we have the new Corinth Living condo mixed use property. So take a picture of this QR code right here, and we'll get you to the front of the line in that waiting list that we have. So let's take a quick look at some of the ways that you can reach out to us. So here is 22 North, our sister property, and here are some extra exterior pictures of 22 North. And you're welcome to go there, 22north.com. And if you're in the Austin area, it's right there in Leander on Baghdad Road. So excellent pictures there. We've got 150 YouTubes talking about the property, talking about commercial real estate investing. This is our architect speaking on the building plan approval, so full transparency. And then the commercial real estate due diligence class is about an hour, and we encourage you to do that because it goes into depth about how to do your due diligence. We meet and speak to broker dealers, family law offices, registered investment advisors. So your investors, advisors are secure in a collateral against equity in our property. We have the deal room, which overfunded, and we'll have the team get you into that if you're serious. But as Mr. Davis was saying, we've got pictures of our track record assets. We have all of the numbers for you as well. We've got information on the deal and the area, market, and then we have a ton of documentation on the project. Really good. We have our deep dive in the deal room as well. You can ask for that access, and you can look at parcel information, do your due diligence. We have information. We have daily posting on LinkedIn. Let's see if LinkedIn is behaving today. Oh, it's behaving good. Okay, so we have daily posting on LinkedIn about advice on how to do safe deals and what's coming up on projects, what events we're having and attending. So you can link up with us on LinkedIn. We have Facebook, where we have our new deal alert, where it's a target IRR of 39%. Remember, we can build it cheaper than we can buy it. And that's why we have the margin to give you a great distribution and a great return. On X, we have X, and we have information and training on commercial real estate due diligence. And then if you want to book a meeting with us, zoomingwithprestige.com. You'll see some of the partners that we work with, some heavy hitters here, zoomingwithprestige.com. And you'll see our research and audit team as well. We're all available to help you. So if you want to book a 15-minute discovery call, very simple, zoomingwithprestige.com. And you'll see the different options of how to book a meeting. Right? Okay. So I want to thank you for taking your lunch. We just took about 35 minutes, which is perfect. Thank you for joining us for lunch. We're going to get this video up right away on YouTube for you to be able to watch and enjoy. If you want a copy of these slides, get back with us, 817-409-8795, 817-409-8795, and let us know that you want a copy of the slides. We actually have a due diligence checklist, a cheat sheet when you're going through your deals that you can book with Mr. Davis, and you can get a copy of that, those cliff notes. So thank you, everybody. We're going to stop the share, and we're going to end this recording right now. And we will see you on the other side. And again, who is excited about that building plan being approved? Yes, 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 yes. Strong, strong. We have a strong team and we have a strong property. Everybody wants to get in and invest with us. Everybody wants to partner with us. People want to steal it. It's a good deal. I mean, it's a great deal. So have a blessed week. We will talk to you soon.